Alright, fellow AMC ape holders, XMAX Trading here, just to go over some important updates on AMC in the meme stock world. So go ahead and subscribe to the channel if you haven't already. Hit the like button for notifications and bell icon, and let's get started. So market insiders reporting the SEC does not want to let firms and individuals get by without admitting wrongdoing anymore as a part of enforcement actions. This, I think they're talking about the Citadel and the Robinhood. SEC will require companies involved in settling some civil enforcement actions to admit wrongdoing, according to Wall Street Journal. Agency reports that laws against market manipulation largely been abandoned admissions of wrongdoing during the Trump administration. But business may resist SEC's latest shift because admitting violations of law can lead to other consequences. SEC will return to a policy of requiring companies involved in settling civil enforcement actions to admit wrongdoing. Such admissions will strengthen the deterrent value of enforcement actions and increase public trust in financial and government institutions, said SEC Director Gerber, who addressed the annual agency conference sponsored by Practicing Law Institute. When it comes to accountability, few things rival the magnitude of wrongdoers admitting that they broke the law. Gerber wrote, quoting Wall Street Journal, admissions, given their attention-getting nature, also serve as a clarion call to other market participants to stamp out and self-report the misconduct to the extent it's occurring in their firm. The agency that enforces laws against market manipulations is referring to policy stated during the Obama administration that was largely abandoned during the Trump administration. The SEC in 2013 said it would make companies and individuals admit wrongdoing as a condition of settling civil charges in certain cases. The agency at the time was facing pressure to show it could clamp down on Wall Street abuses after failing to detect practices in mortgage, bond, and derivative markets that contributed to the 2008 financial crisis. But business may resist the shift because admitting violations can lead to other consequences. For example, investors and other parties may file a litigation claim that they are harmed by this wrongdoing. Meanwhile, SEC can also refer fraud cases to the Department of Justice, which can enforce securities laws through criminal penalties. Fraud is the most serious type of allegation that SEC investigates. This is definitely going after the market makers and the market breakers. Alright, let's look at Frank Nez. AMC short interest is a ticking time bomb. October the 13th. Yeah, so this is Wednesday, not Friday the 13th. This is Wednesday the 13th. Banks, market makers, and hedge funds are all very aware of the trouble stocks, extremely high short interest can mean for them. Financial institutions can be over-leveraged, printed money to help hedge funds keep up with margin requirements and borrowing costs. Hedge funds have lost billions despite turning a few profits recently from plays on AMC and GameStop. Still, any gains seen on paper can easily turn upside down with another upswing. Long short sellers are going to burn new shorts getting into these plays. S3 Partners reporting 100 out of 100 short squeeze score based on the algorithms on AMC short. An AMC short squeeze is inevitable. Let's get started. If you don't know who S3 Partners are, they're a company similar to Ortex. These companies gather real-time short interest data and other analytics, and we question whether it's the complete picture, right? Because all the stuff in the dark pools. Ortex may not have a short predictability score, but S3 Partners does. The algorithms put AMC 100 out of 100. AMC has hit this predictability score more than once. AMC short interest is an outstanding 17.65%. This is self-reported. It can be significantly higher. This high short was recently around 20%. Did some shorts cover? And if so, what will happen to AMC stock price next? Iceberg Research closes their AMC position. They also stated we may open shorts later. What made the analysts close their short position? What made the analysts close? It makes you wonder if they know how many other short positions they've closed too. Iceberg closing their short positions extremely bullish for AMC. It proves AMC has a new bottom. It retested the mid-high 30s range about 3 times now. Bullish sign of strength could be the reason why this short seller decided to take profits before another massive upswing. Iceberg isn't a real company at all, so Iceberg mentioned they would possibly open a short position against signifying that they would do when the price is significantly higher for them to profit on the way down to new levels. Do stocks go up when shorts cover? Activity from covering may create chain reaction where other shorts begin to cover their positions. Whether shorts close their positions with gains or losses, a stock price increase due to the buying pressure from shares being bought back. How long does it take to close a short position to settle? According to SEC, about 3 business days. I didn't know that. Iceberg Research announced they closed a short position Monday. Well, it's not a real company. Main transaction will not reflect until mid-end of the week. How much AMC's share price moves up depends on whether these short sellers are mainly small individuals or large financial firms. Are short sellers profiting from AMC? Short sellers who entered during AMC's run-up are profitable, but not everyone is up. Large financial firms who short AMC this year are still facing apocalyptic losses. That's what I like to hear, guys. Don't short AMC. They can short unmentionable highs. CNBC. AMC has a very high short interest, meaning that there are original short sellers betting the stock will go back down low enough to finally make a profit. So these hedge funds are stubborn as hell, or they can't get out without bankrupting themselves. Thing is, AMC gets extremely uncomfortable when it gets pushed down a cent below $30. The best strategy for short sellers holding losses would be to close now before AMC claims higher levels of resistance, resulting in even greater losses. And for new short sellers, CMC warned about unprecedented highs back in June, even as it peaked, saying resistant temptation. Because those who are profitable on paper, another major upswing could change them one day. High short interest in AMC is a ticking time bomb due to explosive effect a few short sellers can trigger from closing. It's like a house of cards, you know. Iceberg Research for example, took profits without the care of other short sellers, even though it means the price is starting to move up from such a move. That's the danger of short selling AMC. The simple update from the analysts could trigger smaller positions to close, ruining the play for other shorts holding their positions. For retail, this means a huge surge in price action. Retail investors are in it for a short squeeze play. Another advantage retail investors have with short sellers are paying a fee, must keep up to date with margin requirements, or let's get a margin call, and have no control over other shorts. You could be short in AMC, but the financial firm closes due to margin call, you could lose a massive chunk of your portfolio. Retail investors can continue to raise the bar regardless of AMC's current share price. The community continue to buy the stock at 50, 60, 70, just because retail's conviction towards how much AMC is worth is beyond what short sellers can comprehend. Profitable short activists are better off taking profits to get into short squeeze plays against market manipulators. Profitable short activists are better off taking profits and getting in on the short squeeze play against market manipulators. Thank God. They should be on the long side with us, not financial advice, than trying to bet against retail, which is all across the world. Both retail investors and short activists want to make money. A short squeeze would yield some of the biggest gains any party has ever seen. Another major upswing is around the corner. If you read my article on why AMC rebound is sure to happen, then you understand the significance of patterns. We're seeing that AMC short interest continues to climb. The play is set up for bigger upswings. This is bad news for shorts, holding the stock as new levels of resistance are created during upswings. AMC's short interest reached a high as 9% back in January with a top $20 a share. Short sellers jumped in and raised the short interest to 20%, where the stock ramped to $72 per share. After this run-up, short interest fell to 14%, before continuing back up as the current percentage. Original 20%, this is an 11% increase. From 14% to high 20, long ago, we saw a 6% increase. How we can see short seller sentiment: fewer are willing to get burned on the short squeeze play. Short activists have a decision to close positions now while AMC's price is extremely close to its new base. Fail to do so, you get caught in significant losses that are waiting hedge funds. It takes one major upswing to ruin short position gains. How many waves can short sellers tolerate? Short sellers are going long on their plays are burning cash passively from borrowing fees. The next major upswing in AMC will set a new foundation. The $30 range will no longer be the base, but $70 to $80. We're talking about the floor here, not AMC's upswing peak. The next peak could be very well reach hundreds of dollars from mere momentum pressure. Although AMC's share volume has decreased recently, we've seen this pattern right before retail and whales create massive buying pressure again, and shorts covering. It only takes one massive upswing, the whole chain reaction, and both retail investors and short sellers. Both sides are looking at their strategies. It's not costing retail investors anything to hold their stock. A's continue to buy when they had the means available. A community with a Y is much stronger than individuals trading for small profits on the way down. It's only a matter of time for large financial firms begin taking profits from the short AMs and leave short sellers, the smaller ones, behind, or vice versa. Ticking time bomb. Ticking time bomb. I think that was long-winded, but he's trying to make the point that get out now. Get out now. Finance, knowledge, and freedom. Finance, knowledge, and freedom, boys. All right. Until next time. Later.